Introduction to Online Stock Trading. Welcome to the exhilarating world of online stock trading. In this fast-paced digital era, where opportunities abound at every turn, it's no wonder that individuals are flocking to the virtual marketplace in search of financial success. Online stock trading has emerged as a popular and accessible means of investing, allowing anyone with an internet connection and a desire for financial growth to participate in the exciting world of stocks. Whether you're a seasoned investor or just dipping your toes into the market waters, this video will serve as your comprehensive guide to earning from online stock trading. So buckle up and get ready to unlock the potential for profit right at your fingertips. How to get started with online stock trading. Getting started with online stock trading can be an exciting and potentially profitable venture. However, it is important to approach it with caution and a solid plan in place. Here are some steps to help you get started. 1. Educate yourself. Before diving into the world of online stock trading, take the time to educate yourself about how the market works, different investment strategies, and risk management techniques. There are plenty of resources available online, including articles, books, and webinars that can provide valuable insights. 2. Set financial goals. Determine what you aim to achieve through your stock trading activities. Are you looking for short-term gains or long-term investments? Having clear financial goals will help guide your decision-making process. 3. Choose a reliable brokerage platform. Selecting a reputable brokerage platform is crucial for successful online stock trading. Look for platforms that offer competitive fees, user-friendly interfaces, comprehensive research tools, and good customer support. 4. Start small. It's advisable to start with small amounts when first getting started with online stock trading until you gain confidence and experience in the market dynamics. 5. Develop a trading strategy. A well-defined trading strategy is essential for consistent success in the stock market. Consider factors such as risk tolerance, investment horizon, diversification principles, and technical analysis methods when developing your strategy. Remember that online stock trading involves risks and losses are possible if not managed properly. Stay disciplined in following your strategy and continuously monitor market trends to make informed decisions. Advantages and disadvantages of online stock trading. Online stock trading has become increasingly popular in recent years, offering individuals the opportunity to participate in the financial markets from the comfort of their own homes. However, like any investment strategy, it comes with its own set of advantages and disadvantages. One major advantage of online stock trading is convenience. With just a few clicks, you can buy or sell stocks at any time during market hours. This flexibility allows you to react quickly to market movements and take advantage of potential opportunities. Another advantage is cost-effectiveness. Compared to traditional brokerage firms, online platforms often charge lower fees and commissions. This can significantly reduce your transaction costs over time, allowing you to keep more of your profits. Additionally, online stock trading provides access to a wealth of information and resources that can help inform your investment decisions. Many brokerage platforms offer real-time market data, research reports, and educational materials that can enhance your understanding of the markets. However, there are also some disadvantages to consider. One drawback is the lack of personalized advice or guidance from a professional broker. While online platforms may offer tools and resources for analysis, ultimately the responsibility falls on you as an individual investor to make informed decisions. Furthermore, online stock trading requires discipline and self-control. It's easy for emotions such as fear or greed to influence your decision-making process when investing large sums of money without professional oversight. Technical issues or system failures could potentially disrupt your ability to trade effectively. Internet connectivity problems or platform glitches may result in missed opportunities or costly mistakes if not managed properly. In conclusion, online stock trading offers many advantages such as convenience, cost-effectiveness, and access to information. However, it also comes with its own set of risks, including a lack of personalized advice, the need for self-discipline, and potential technical issues. Overall, it's important for individuals considering this approach to weigh these factors carefully and develop a solid trading strategy to mitigate potential risks and maximize their. Choosing the right brokerage platform. Choosing the right brokerage platform is a crucial step when it comes to online stock trading. With so many options available, it's important to do your research and find one that suits your needs. Here are some factors to consider when making this decision. 1. Reputation and reliability. Look for a brokerage platform with a solid reputation in the industry. Check reviews and ratings from other traders to get an idea of their reliability. 2. User-friendly interface. A user-friendly interface is essential for smooth navigation and ease of use. Look for platforms that offer intuitive features and tools, making it easier for you to execute trades. 3. Fees and commissions. Consider the fees charged by the brokerage platform, including commissions on trades. Compare different platforms to find one with competitive rates that won't eat into your profits. 4. Research tools. Access to quality research tools can greatly enhance your trading experience. Look for platforms that provide real-time market data, analysis reports, charts, and educational resources. 5. Customer support. In case you encounter any issues or have questions related to your trading activities, good customer support is essential. Choose a brokerage platform that offers reliable customer service through various channels like phone, email, or live chat. Remember that choosing the right brokerage platform can significantly impact your overall trading experience as well as profitability in online stock trading. Developing a trading strategy. A successful online stock trader knows the importance of having a well-defined trading strategy. Without a plan in place, it's easy to get caught up in the emotions of the market and make impulsive decisions that can lead to losses. So, how do you develop an effective trading strategy? You need to determine your goals and risk tolerance. Are you looking for short-term gains or long-term investments? How much are you willing to risk? These factors will help shape your overall approach. Next, consider your research methods. Will you rely on technical analysis or fundamental analysis? Technical analysis involves studying charts and patterns to predict future price movements, while fundamental analysis focuses on analyzing company financials and industry trends. Once you've determined your research methods, it's time to create rules for entering and exiting trades. This could include setting specific price targets or using stop-loss orders to limit potential losses. Another important aspect is managing your emotions. Greed and fear can cloud judgment when making trading decisions. Developing discipline and sticking to your strategy even during turbulent times is crucial for long-term success. Regularly review and adjust your trading strategy as needed. Markets are constantly changing, so it's essential to stay adaptable and learn from both wins and losses. By developing a solid trading strategy tailored to your goals and risk tolerance, you increase your chances of achieving success in online stock trading. Tips for successful online stock trading. 1. Do your research. Before diving into online stock trading, it's essential to research and understand the market trends, company financials, and any relevant news that could impact your investment decisions. 2. Start with a plan. Develop a trading strategy that aligns with your goals, risk tolerance, and time horizon. Set clear objectives and stick to them while making informed decisions based on your plan. 3. Diversify your portfolio. Don't put all your eggs in one basket. Spreading out investments across different sectors or asset classes can help mitigate risks and maximize potential returns. 4. Stay informed. Keep up to date with market news, economic indicators, and company earnings reports to stay ahead of the game. Utilize reliable sources of information to make well-informed choices in your trades. 5. Use stop-loss orders. Protect yourself against significant losses by placing stop-loss orders to automatically sell stocks if they reach a certain price threshold. This helps limit potential losses during volatile market conditions. 6. Practice risk management. Only invest what you can afford to lose without jeopardizing your financial security or lifestyle. Setting aside emergency funds separate from your trading capital is crucial for long-term success. 7. Learn from mistakes. Accept that not every trade will be profitable. Learn from both successful trades and those that didn't go as planned. Analyze mistakes objectively, make adjustments to improve future strategies, and keep emotions in check. 8. Follow market trends but trust your instincts too. While it's important to follow market trends closely, don't solely rely on them when making investment decisions. 9. Remember that each investor has their own unique style. Trust your instincts but back them up with thorough analysis before executing trades. 10. Be patient and discipline yourself. Patience is key. Avoid impulsive buying or selling based on short-term fluctuations in prices. Stick with the overall strategy and have faith in the long-term potential of your investments. Conclusion. In this digital age, online stock trading has opened up a world of opportunities for individuals to make money from the comfort of their own homes. With the right knowledge and strategy, anyone can participate in the exciting world of stock trading. Getting started with online stock trading is relatively easy. You just need to choose a reputable brokerage platform, open an account, and deposit funds. However, it is important to remember that trading stocks involves risks and requires careful consideration. One advantage of online stock trading is the convenience it offers. You can access your portfolio anytime and anywhere using a computer or mobile device. Additionally, online platforms often provide valuable resources such as real-time market data, research tools, and educational materials to help you make informed decisions. Despite its advantages, there are some disadvantages to be aware of when it comes to online stock trading. The fast-paced nature of the market means prices can change rapidly, making it essential for traders to stay alert and monitor their positions closely. Furthermore, while technology has made trading more accessible than ever before, it also means increased competition from experienced traders who may have an edge over beginners. Choosing the right brokerage platform is crucial for successful online stock trading. Look for a platform that offers competitive fees and commissions while providing reliable execution speeds and user-friendly interfaces. It's also important to consider factors such as customer support availability and security measures implemented by the broker. Developing a solid trading strategy is key to long-term success in the stock market. This involves setting clear goals based on your risk tolerance level and financial objectives. Research different investment strategies such as fundamental analysis or technical analysis techniques like chart patterns or indicators that suit your style best. To maximize your chances of success in online stock trading. 1. Educate yourself. Continuously learn about markets trends through books, webinars, videos, podcasts, etc. 2. Start small. Begin with a smaller amount until you gain confidence. 3. Diversify your portfolio. Don't put all your eggs in one basket. Distribute your investments across